Good morning, Steve Free in Chicago with the morning grain comps. We had mixed grain trade overnight with beans up 9 cents. Looks like November beans are in a 14.51, maybe 15.10 trading range. Soybean oil right now is at a 12-week high, and as far as board crush is concerned, it's at a 3-month high. We also have corn down about 2 cents in a range of 670 maybe to 720 on the December. Wheat's up 4 cents. Maybe we have a range of 840 to 880 until we know more about whether or not Russia's going to extend the Ukraine export corridor that expires in November. Right now, Russia's having talks with Turkey about the export deal with Ukraine. Russia's also having talks with China about the Ukraine war as Ukraine makes more advances in the east. We do note that there is talk that the Biden administration may impose additional sanctions on China because of their movement possibly towards invading Taiwan. This would hurt U.S. Soybean export demand to China. China's trying to do everything they can to reduce raw material imports from U.S., including soybeans. Argentina's soybean meal, and soybean oil prices are a steep discount to U.S. And yesterday, China bought 5 cargoes of Argentina soybeans. We get export sales tomorrow after 4 weeks of no news. The daily soybean numbers have been around 1.9 million tons, 800,000 tons to unknown, 755 to China, 230 to Mexico. The corn market is trying to struggle with the strong domestic basis and the upcoming harvest with the 8 to 14 day warm and dry across most of the Midwest versus the fact that U.S. traders expect that the USDA could lower the corn yield again in the October report. We still see Brazil, Argentina, and Ukraine corn export prices cheaper than U.S., which suggests that when the data comes out tomorrow, it could be a low number for U.S. corn. And some people think that final corn exports could be as low as 2 billion bushels, which could offset a lower U.S. crop. In the wheat market, again, a lot of uncertainty. December wheat probably in this 840, 880 range. The higher dollar offers resistance to wheat. The recession here in the U.S. could slow food demand, and as far as the inflation data for August, food prices were up again, which could raise concern about food demand. We also note that Russian wheat prices are still a steep discount to U.S., and there is talk on September 15th, the rail strike in the U.S. that could slow movement of grain domestically and to the export ports. So again, choppy trade in the markets. Beans may be overpriced if South America is competitive and China does not buy. Corn and wheat could be in a trading range, waiting for news about demand versus the possibility of an export corridor shutdown in Ukraine.